Hi, Bill here with the Metals Minute. Today is Wednesday, February 2nd, 2022. We've moved this outside today into the real world. There's a lot of talk about the metaverse these days and alternative realities. And I want to talk about what's real today. You know, gold and silver are real, we know that. But one thing that's not real is all the talk about rising interest rates. Let's assume that the most aggressive estimates are true and that they raise them 6 to 8 times this year. I don't believe it'll happen, but let's assume that it does. We're only talking about a 2 to 2.5% total increase in interest rates. And with official inflation running at 7%, and real inflation running between 12 to 14%, a 2.5% increase is only going to make real interest rates slightly less negative than they already are. So interest rates as a tool to bring down inflation are kind of off the table. That's not going to be possible. They cannot afford to get them up to the between 10 and 20% to bring down inflation like they did in the early 80s. That just won't happen. We have too much debt for that. So what I believe is going on is they're trying to use energy prices to do more of the lifting that interest rates used to do. So in the same way that interest rates, when they raise those, it increases the cost of capital. It costs more money to borrow money, so it kind of damps down the price of real estate. It causes demand to be tamped down because prices get too high, everything gets too expensive, and then demand begins to fall off. Well, if you raise energy prices, those are also something that affects the entire economy. Virtually everything we purchase is shipped, and fuel cost, energy cost, that's a big part of every product that we receive. And so we've got cold weather. We had a blizzard on the East Coast last week. We've got across all the way from Texas to Maine getting hit with some weather. We've got about a half inch of sleet on the ground, a little lull in the action, and then we've got some more snow coming here. But the reason I mention that, we have nearly record low stocks of propane right now, and also various heating oil inventories are really low. Diesel fuel is low. There's a low quantity of that. We've all seen what's happened with gasoline prices. Utility costs are going up, rents are going up. All these things are feeding into the general overall inflation. And what happens is ends up being how the government finances a lot of their debt, is by inflation rather than by raising tax rates. That's going on also in many places, but inflation does that work for them, because as the cost of items rise, guess what? The sales tax revenue also rises, and as they increase people's wages, that means more income taxes come in, even though they haven't raised the tax rates, even though they are. But even without doing that, that causes the tax revenues to rise just from inflation. And so we've got inflation on every quarter. We're not going to be saved by interest rates. What we will be saved by is precious metals. Looks like we've got some geese going by. They're tired of this cold. They're heading back south. But it looks like we're going to see a lot more volatility in many sectors of the economy, but precious metals seem to have a good floor under them, and as energy prices increase, so does the base cost of getting metal out of the ground. So that acts as a pillar of support. We also have some large buyers of physical metal that every time they tamp down the price below 1800, it doesn't seem to stay there very long. In fact, today we're already back up over the 1800 mark after being smashed down in the past week. And there's evidence that there's a lot of physical demand out there. And so that's great for us. Hey, listen, hope you and yours are staying warm. Stay out of the cold. Be careful out there. Thanks for tuning in. We'll see you next week.